Infra India Limited Q3 and 9 months FY24 earnings conference call. We have with us today Mr. Dhaval Ajmera, the Director of the company, Mr. Nitin Bavisi, the Chief Financial Officer, and Ms. Sonia Agarwal, the Senior Manager for Investor Relations. Please note all the participant lines will be in the listen-only mode, and one can ask questions only after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sonia Agarwal. Thank you, and over to you.
Thank you. Good evening, everyone, and a warm welcome to you all. On behalf of the company, I would like to thank you all for participating in Ajmera Realty and Infra India Limited earnings call for the third quarter of FY24. The call will commence with the opening remarks by our Director, Mr. Dhaval Ajmera, and will be followed by the business performance discussion by our CFO, Mr. Nitin Bavisi. We have already shared the operational update of the quarter in the second week of January. The investor presentation and the press release based on the financial results adopted by the board have been uploaded on the stock exchange website and can be downloaded from a company website. Please do note that some of the statements in today's discussion may be forward-looking in nature, reflecting the company's outlook and may involve certain risks and uncertainties that the company may face. I would now like to hand over the call to our Director, Mr. Dhaval Ajmera. Thank you, and over to you, sir.
Thank you. Good evening and welcome everyone for our earnings call. I will begin my discussion with the overall macroeconomics and sector updates, and then thereby taking towards our company's growth and forward charts. Just to look at the overall economic cycles, we've witnessed that Indian economy is demonstrating resilience and robustness in spite of these geopolitical tensions in the Middle East and the Ukraine, Russia, etc. But I think India is just moving in a growth trajectory and is firm and is promising, positioning us as the fastest growing major economy. We are optimistic about the reduction in rates by the global central banks backed by RBI's policy rate adjustments, which should help stimulate further growth and opportunity. This brings me to the key highlights of the interim budget which was just announced, that the focus is on the infrastructure development and newly introduced housing schemes for the middle class is going to be a game changer in the real estate market. These measures are expected to spark a surge in residential demand and supply. The government's commitment to construct 2 crore homes under the PMAY rural scheme is also inching towards the agenda of housing for all, which is made by our Honorable Prime Minister. Furthermore, the tax incentives for home buyers and a remarkable 11.1% year-on-year growth in the increase in the infrastructure outlay, which is about 11 lakh crores, shows a promising runway of opportunities coming towards real estate. Although there were no direct benefits towards real estate, but I think this infrastructure growth is one of the most defining growth for real estate market. And wherever there is a great surge in infrastructure, we've always witnessed a good growth in the real estate market of that particular area. Coming back to MMR, where we primarily operate, the recently opened the Mumbai Trans Harbour Link, the Atal Setu Bridge, the construction and opening of the coastal road, which is very near now in this coming month, and the metro expansions are just paving ways for the growth in the real estate sector in different regions. And definitely we are seeing this also happening in our projects and overall as a real estate market. It gives me immense pleasure to report that our business has steadily maintained a robust performance across key metrics. In this quarter, we registered a decade-high quarterly revenue of 209 crores, a record-breaking achievement fueled by significant growth in sales and business development initiatives. We experienced multifold jump in sales value to 2 times year-on-year and area sold to 1.5 times. This dynamic momentum in sales can be largely attributed to our key projects, Ajmera Manhattan and Ajmera Eden, one in Wadala and one in Ghatkopar. Diving deep into our project updates, our premium residency project, which is Ajmera Eden in Ghatkopar, has recorded yet another successful quarter with half of its total inventory already being sold out. And just to tell you that as far as construction is concerned, we are steadily advancing towards it, and we are just on the second floor where we started just about few months ago, and we are advancing steadily in construction. But we are very happy to say that we are 50% of the inventory sold out in that project. Our completed projects, the Ajmera Greenfinity in Wadala and Ajmera Sikova in Ghatkopar, has now very, very minimal inventory left for sale. The Ajmera Freeway project in Juhu has reached its construction milestone of 11th floor slab, and being the last stage of its RCC completion, and also we are looking at good inventory being sold, and now the demand with almost project getting completed, we are seeing a good inventory also being sold in the coming quarters. Ajmera Manhattan, which offers compact luxury apartments, reported more than 60% of the inventory already being sold out. The project is at mid-stage of completion with major work in progress happening at both the towers. Moving on from Mumbai to Bangalore, our affordable residential projects, Ajmera Lugano and Ajmera Florenza, where about 80% of its inventory has been sold and is also under fast-track execution. We aim to deliver all our projects well before the committed RERA timelines. In the first half of FY24, we announced total of 7 new projects. In continuation to this, we are happy that we are adding one more project in Bandra West, a joint redevelopment with Rustamji. And to deliver this luxury residential project, we have an estimated GDV to our share of 380 crores, which is total of about 760 crores, and our share comes to about 380. We are progressing steadily towards our 1,000 crore sales target, and having already achieved 730 crores in the first 9 months, and we are very confident that we will surpass this number in the coming quarter. We also have a development potential of about 1 crore 16 lakh square feet from our own land banks, and these factors coupled with our business development efforts through redevelopment, joint ventures and strategic acquisitions will undoubtedly fuel our future growth. With this, I would like to say that we are inching and very nearly inching towards our 5x growth mark, and very soon with all these project developments and 8 new projects which has been announced now, and with our existing portfolio, we will definitely cross our target of 5x in very soon than what we had estimated. I would now like to hand over this conference to our CFO, Mr. Nitin Bhaviti, who will take you through the performance highlights. Thank you.
Thank you, Mr. Ajmera. Thank you, everybody, and very warm welcome and good evening to you all. Before we move to the Q&A session, allow me to summarize the compelling performance and the financials we have delivered in the third quarter and 9 months FY24. Starting with our operational performance for the quarter, our sales value lift by considerable, almost doubling, which is 98% precise YOY basis, hitting 253 crore, and our sales area also witnessed 63% YOY growth, reaching to 1,03,573 square feet. Our collections hit 151 crore, a solid increase of 30% YOY, primarily driven by sustained sales momentum and as well the fast-track execution, getting into the next demands and execution-based collections kind of a thing. Addressing the financial figures, our total revenue zoomed to 2.5 times YOY to 209 crores. It is heartening to share that this represents the highest quarterly revenue in a decade. Our EBITDA stood at 62 crores, up by 163% YOY and 55% quarter on quarter, resulting in EBITDA margin of 30%. Our PAT reached at 30 crores, which zoomed 3x on YOY comparison with a PAT margin of about 15%. This encouraging sales momentum is mainly attributed to our key projects, Manhattan and Ajmera Eden. The latter became the revenue recognition eligible project in this very quarter. Coming to our performance in the 9-month basis FY24, our sales value reached 730 crore and the sales area touching 359,820 square feet. the collection stood at 373 crore, and revenue for this particular period, which is the 9-month period, is 474 crore, which represents 47% YOY increase. Our EBITDA registered 140 crore, stood at 140 crore, up by 41% YOY, with an EBITDA margin of 30%. The PAT amounted to 74 crore, an increase of 31% YOY, resulting in a PAT margin of 16%. Our revenues and PAT already surpassed that of FY23 full year number. This is the 9-month, first 9-month year-to-date numbers. Keeping the financial stability as the cornerstone of our focus, we have successfully managed to sustain our debt levels at 785 crore and kept the debt equity ratio well below 1x as we have been aspiring, and it is precisely at 0.94:1. The weighted average cost of debt also stood at stable number because of the overall regulatory and the RBI keeping the rate in status quo basis, which is the average weighted average cost is 12.3%. As Mr. Dhaval Ajmera mentioned earlier in this particular commentary, our revenue potential of approximately 4,950 crore incorporates both our existing project as well as upcoming launches, I mean to say. We foresee projects which are OC received contributing around 157 crore in the timelines of next about couple of quarters. And mid-stage projects portfolio is expected to contribute about 1,666 crore with a revenue visibility in the time span of about 30 months. Our potential launches stood at 3,130 crore in terms of revenue visibility. The estimated net cash flow from our current portfolio is about estimated going to be 950 crore. With this concise summary, our business highlights and for financial performance, I would like to invite you all for the question answers and further interactions about our numbers and business performance. Thank you all.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Priyam Bota from Value Equity. Please go ahead.
Thanks for the opportunity. The last quarter, Ajmera and Rustaji, you had come together for one of the projects in Bandra. So, can we see that such kind of partnerships flourishing in the coming quarters? And if yes, is there a possibility in the immediate pipeline?
Mr. Priyam, may I request you to self-mute, please? There's some background noise coming from your line.
Okay. Is it now fine?
Yeah. Yes. Can you repeat the question, please?
Yeah, sure. So what I was asking is, this quarter we had done a partnership with Rustamji for a Bandra project.
Yeah.
Yeah. So can we see such partnerships coming in the next quarter, or do you have any immediate pipeline for such partnerships again?
Well, we are, it is based on project to project and some opportunities which is coming our way. This was an opportunity which we both were envisaging and looking at, and that's how we came into partnership to bring in a marquee project in that area. We are open for opportunities and partnerships, but nothing in the near quarters coming right now.
Okay, thank you. And I just wanted to know how is the Kanjurmarg project panning up, and what is the sales potential for this project? And wanted to know some more details with regards to its launch and what category you are looking out for this project. The
Kanjurmarg project, we are there. we are looking at all the approvals and everything which is underway. Overall, it is a larger project which will have an overall potential of about 8 million square feet of carpet area, which will come up in the near future. But we want to bring it in a overall holistic scheme of things. Some part of it which we may launch this financial year, but overall we are envisaging that to launch this financial year. But overall, we would like to unveil the entire plan once we are completely ready with the entire master plan, with the complete details about commercial, residential, and other sectors within the master plan.
So basically, it would be a mixed match of commercial and residential.
Yeah, it will be mixed because it's the largest township, so definitely it will have everything and not just residential.
Okay. Thank you so much, sir, and I wish you all the best.
Thank you.
Thank you. We have our next question from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
So with so many launches of various developers, being bunched together, and as you may be noticing, business cycles for most businesses are now become shorter in duration. So, what is the company's plan B if there is a just deterioration in overall sales volumes? Are we looking at just cutting the most of the ongoing bookings at a lower rate, just to be very sure that we are not short of bookings after 2-3 years when all this supply comes together bunched up? Secondly, sir, what is the kind of sustainable initiatives that we are taking so that most residents who will now come in may be very conscious of the sustainability aspect as regards energy and water? So have you taken any kind of consultation from any world-class architects or experts in this field? And third is, sir, any kind of new age prefabs or other improvements we have made in our construction so as to deliver much before competition or earlier?
Okay, so to answer your question, number one, over the last 2 years during the COVID, the Mumbai Municipal Corporation had announced a 50% cut in their premiums, and we had seen a spurge of premiums being paid by developers, which is where we are seeing a great amount of supply which is being seen in the market. This has already been 2 years plus when the premium cut was announced, and developers like us and many others have paid premiums. Overall, we are seeing a good demand in the real estate cycle. With this supply, I really don't see that it will at least, with the way Indian economy is growing and with the kind of Mumbai infrastructure which is coming up, our take is very clear that Mumbai is becoming and regaining the financial capital strength, which probably to an extent was reduced over the last few years. And now with so much of infrastructure coming, I think there has been a great demand all across, and at least we are buoyant about the sales in the coming few years in particularly Mumbai region across. And overall, as I said, the Indian economy is looking very good. People are confident holistically about our country, and that's why every sector is seeing a great growth. So I don't see too much of dip coming in terms of pricing. Yes, there might be a little bit of up and down in demand supply, but overall it looks positive.
No, with due respect, my question was that the business cycle in almost every business have become short due to communication being so seamless, and the world overall also becoming fast. What used to happen is in a century is happening in a decade, and what was happening in a decade is happening in a year. So what is our plan B? If this spurt doesn't last too much, what you are saying is also correct that for 2 years we are saying that it will slow down, but it could be that so what I want to know, what kind of preventive action we are taking so that the company doesn't go into a kind of cash flow trap.
So if you really look at most of our project acquisitions which we have done now, And with our current pipeline, if you really look at it, we have a lot of about more than 50 to 60% of our inventory which is coming from our own land bank, which is already pre-owned. Number two, most of our new projects which we are doing is either a redevelopment or a JV or a SRA project or something like that, where the investments in land has been very, very minuscule or less. So if you really look at our entire cash flows, and secondly, most of our projects which we are currently doing where we have a faster turnaround time, we are envisaging every project which we take now should be finished or closed within 2 to 3 year cycle. So with that kind of a turnaround time, we are, mindful about our cash flows being maintained well and being there. Yes, definitely, if there has been, tomorrow is in the, if we really see a lot of negative splurge coming in the market and demand definitely just been becoming very, very low, obviously everyone will have to take the burn of it, but the advantage stands to us is that our land banks are all our, already paid for, and nothing is there in the in like a debt form. So we stand to be more stronger than others, number one. So that is where we probably stand more advantages to it. So that's what I wanted to answer. Secondly, as far as your, the sustainability homes are concerned, we at Ajmera are now making every home of ours are green homes. We are very, very mindful about sustainability. All our projects are going to be and will be certified green homes. So in terms of our, all our materials, all our block works or whatever construction materials and other materials which we take are absolutely sustainable as per the sustainable norms. And with the kind of technology and the movements which are happening in the market, and we already have a research team within our group itself which constantly monitors the latest technology for construction, for probably sales value or any technological advancement which comes up in the real estate cycle. We are trying to update ourselves every quarterly or every yearly to ensure that we are up in the market, to ensure for faster delivery and better efficiency, because that is where will actually help us win the game. And this is what we have a team which constantly tries towards betterment of the projects.
And about any kind of new age, construction methods that we have specifically taken, and if you would just be able to explain what is our management structure at this point of time, who amongst the family is still involved in the business, and have we taken on any kind of high level professionals in our team also?
So, well, as far as technology are concerned, there are many which we do it, whether small or big, but it is too technical for us to answer. We can obviously get on an offline for understanding more technological for, construction purpose. As far as management is concerned, in our management, we have a chairman, managing director, and a whole-time director. Plus, obviously, you must be seeing our board of directors with outside Mr. K.G. Krishnamurthy, Ms. Aarti Ramani, and A.C. Patel. The day-to-day operations has been completely managed by the team of professionals, which is from the CFO to the GM to everybody in every different fields of construction, finance, planning, human resource, etc. So, we completely are having a full set of professional team members who are managing the insight and day-to-day show of it. Obviously, there are a few family members also involved within it, but the final say and call is of the professionals.
I appreciate you answering my question so well, sir.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Jeevan Patwa from Sahasrar Capital. Please go ahead.
Yeah, hi Dhaval. So,
Hi.
Congratulations for wonderful set of numbers. So, firstly, if I heard right, are you saying we are going to launch a part of Kanjurmarg project in this financial year? So, FY24 you are saying?
So that's this financial year, not this FY24. I'm saying next financial year. Sorry, that's my mistake. But in the year 24-25 is what we envisage to launch some part of Kanjurmarg.
Because I think everybody is eagerly waiting for that launch. So is it going to be in the first half or is it in the later half?
Well, as I said earlier, we want to, this is one of the few pieces of land which are there, which we want to get the right kind of valuation and bring the right product for the market. While we are doing all the possible steps to finish all the approvals, connectivity for the entire Mumbai and MMR region. So definitely we are looking at an appreciating value coming in for Wadala. An appreciation will happen, but also a good demand for this region is coming up, for which we will see a good volume also coming in this area.
Right, because we have, I think, we have almost 6 million square feet land parcel in Wadala. So I think the price appreciation should give us good benefit. So any update you have seen in the pricing in terms of after Atul Setu or in last 6 months? Has the prices have gone up in this region or they are still there?
No, but Atul Setu has just started. We are definitely, what we have seen is over the last few months, it's just been about 15-20 days or a month or so when this bridge has started. But we are seeing a good rise in demand coming in. There is a lot of connectivity factor which has happened, and people from even the MMR region are coming over here to look at flats in Wadala. Just to clarify, we have about 3.6 million square feet of carpet area in Wadala to be sold. Not 6 is the sellable area, but now we all talk in terms of carpet, so we just wanted to clarify that. And with that, right now over the last 1 month, there has been a good surge in the residential demand, at least at Wadala. And although Manhattan, where we have reached 60% of our sales potential being sold out, we are still looking, usually, when the project is at 50-60% level, we usually see that this being now a consistent sale. But with the kind of demand coming in, we are, we are very happy that sales have been at a good number.
Our FY23 number and the quarter year-to-date number is 474 crore. So this is that, and the overall execution of the projects, definitely we are going to see a significant jump over the FY23 reported numbers.
Okay. And sir, I was reading your earlier con call. You told something 5x revenues. So can you please tell me the timeline, like till when we can get that thing?
So our entire target is that we want to overall grow 5x from where we were about 2 or 3 years ago, and that is the growth trajectory which has already happened. We were earlier we were about 1 million square feet of projects in hand. Today we are 2.3 million square feet of projects in hand. We were earlier 7 projects doing about now we are doing about 16. We have about, earlier we were 1,000 crores of projects with GDV. Today we are 3,000 crores of project GDV. So overall, if you see, we are progressing towards the 5x growth, and thereby we are also hopeful that with the kind of projects which we are announcing and we are developing, definitely with our sales numbers and sales realization, we will also have a 5x growth in our revenue.
Okay, got it, sir. Sir, sorry if I missed it earlier. Have you given any FY24 guidance for revenue?
No, FY25, you mean FY25, right?
Yeah, both, sir. In the last quarter, in Q4, any number you'd like to give, and for FY25 also?
As I clarified that, the 9-month number already surpassed, and almost on these lines only, we should be having the next quarter and the financial year end numbers as well.
Okay, got it, sir. Thank you. That's it from my side, and all the best.
Thank you. We have our next question from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity, sir, and fantastic numbers. Congratulations on that. Do we have any update on the debt repayment plans for the coming year or for FY26?
Yeah. So, as we have mentioned in our commentary that, despite the aggressive business development activities, our debt remains stable, and we are investing and putting our, operating cash flow on the next 8 projects, which is having the launch pipeline. Having said, let me bring up very, pleasant news that, the Manhattan project, which is, we had the opportunity to, further take out that particular potential out of that particular project. And we announced sometime before that, structured deal is around the corner. That deal has been consummated, and in Q4, you will hear exact specifics of that particular deal. And that is going to give us a further acceleration on our prudent debt management. Plus, we have some, good operating cash flow support from our existing project portfolio, which also going to help us on the overall debt management.
All right, sir. And with the upcoming launches in FY25, do we see our EBITDA trending upwards north of 30%, or 30% should 30% is the number that we should consider going forward?
As you can see that, the nature of the project is mix of society redevelopment, MADA redevelopment, SRA redevelopment, and as well, on our own land bank. So with this set of mix in terms of the nature of the project, we should be, maintaining this particular trajectory. And definitely, as we move on with more of our own land bank parcel, then in that case, this can further inch up towards better number.
All right, sir. Thank you. That was my question.
Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We have a question from the line of Faisal Zubair Hawa from HG Hawa and Company. Please go ahead.
So, sir, are we in talks with any kind of PE funds or large, funds like Blackstone or to pre-sell our projects, and are we making any kind of efforts to cut our interest rate, which is very high at around 12.5%? Yes.
So first set of the question I would reserve for Dhaval to give more light. In terms of the cost of debt, definitely as we are seeing the RBI giving the list to this RBI repo rate hike. But however, the money market situation and it's being tight and the cost of funds remains in that particular tight range. So we are seeing that particular thing. But as I sensitize on, very structured deal which has happened and, execution and the documentation part is going on. So we are going to come back with better set of numbers, both in terms of the debt management as well as on the cost of debt.
So coming to your answers of any tie-ups or participation with any PE funds or anything, well, there has been a lot of interest being shown with some funds and everywhere. However, formally we've not tied up. We are looking at project level participations or partnership with them. But as of now, we don't have anything formally closed hands or finalized. But definitely with our growth opportunities coming way and with the kind of projects we want to do, definitely PE participation just helps and adds a good feather on our cap, and which we are very open to do.
Okay, sir. Thank you so much.
Thank you. We have a next question from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Thanks for the opportunity. Can you please talk about, what
please
kind of...
use your handset mode. You're not very clear.
So, is it better?
Yes.
Can you please talk about, what kind of margins are we looking for in our newly launched projects? Can we see higher margins compared to 30% kind of EBITDA margin that we are doing currently?
So as I explained that, we have ongoing projects, which is, the Manhattan and rest of the other projects. And launch pipeline, we have the mix of this nature of SRA, MADA redevelopment and society redevelopment. So typically in that particular space where we have, the EBITDA margin, which is not as better than in terms of our own land bank. So as we are getting into this mix and as we are moving into the next phases of our land bank, then definitely we will have the better margin numbers coming forward.
But how has been the realization growth in some of our launch projects? Let's say, we launch one project in phase 1 and subsequent for phase 2, what kind of realization growth are we seeing?
So, realization has been, steadily moving up. Every project, wherever, progress, where all these projects are happening and when we came, it is always a cycle. Overall, if you look at it, we have seen a year-on-year, let's just to give you an example, we've seen an 8% rise in our realization value in Manhattan. Nucleus project, which was ready or just got ready, we've seen about upwards of 25-30% rise in our realization value. Sikova also, which got recently ready, we saw on the ready, almost nearing project, we saw about 25-30% hike in our realization value. So, as in how the project progresses and it becomes ready, there has been a rise. So, obviously, it's a demand-supply game altogether. And the moment the projects are nearing completion or nearing getting ready, we get a better realization value as compared to under construction. And that's how we are strategically selling all our products in different areas also.
Just to give you the number substantiation, if you refer to our existing portfolio slide, in terms of Manhattan being the very flagship project where we have already achieved sub 30,000 as an average price. As we move forward for the balance of the inventory, definitely our aspiration is more than 31K as a price expectation. So there where we have already provided our guidance in terms of the better price points.
And we had launched this project at what price?
It's about 28,000.
Okay, now we are selling at 31,000.
Yeah.
So, what steps are we taking to ensure that, in case there is a substantial rise in the raw material prices like steel and cement, our margins don't get impacted for this projects which we are launching?
So sorry, what did you say?
What steps are we taking to ensure that our margins are protected in case there is a significant rise in prices of cement and steel?
Well, if there is a significant rise in the prices of steel and cement, definitely the input cost is going high, thereby our cost will go high. So definitely there will be certain, depends on what is the cycle of the project, because we need to be mindful about volume as well as price realization. If my project is nearing completion or getting ready, there will be a good demand for people to come and buy, probably which little better than an under construction project. So obviously we can increase the price a bit over there. But if I am at an under construction value, I do not want to hamper my volume of sales, and I would like to continue doing it, maybe taking a temporary hit, because these are maybe temporary phenomena and not a permanent hike in the price. So if that is a temporary, we may just absorb it and move ahead. But if that continues, obviously the prices is what will increase and move ahead. But our entire aim is to constantly grow the sales volume along with a good price realization, so which will help the company grow in a better way.
Okay. Thank you, Mr.
Thank you. We have our next question from the line of Harmeet Desai from Pendulum Investments. Please go ahead. Mr. Desai, your line is unmuted.
Yeah, thank you for the opportunity. So first, I wanted to ask how many redevelopment opportunities are we looking, and any guidance if you can give towards that?
Well, there are many, to be honest with you, we may be looking more than 20, 30 at a time, but it is not that every redevelopment society clicks, but we definitely have pitched into a lot of societies today. A lot of societies are eagerly looking and wanting to discuss with us, but these are all under wraps till we actually sign with them and probably shake hands. We are hopeful, and that is one of the sector which we are constantly rising. We started one with Juhu. Today we increased to Versova, Borivali, Bandra, and slowly we will even bring more to this table, because Mumbai, one of the area for development is a redevelopment of the societies, and we are striving to grow better in that segment.
So any particular filters which you are keeping for redevelopment projects?
Any particular what?
Filters or what things?
So we usually, don't look at societies which are less than 1,000 square meters unless it is in a very, very prime location, the one which we did in Juhu. Otherwise, our sizes should be upwards of 1,000 or 1,500 square meters because, usually the costs of admin and balances are better when we have a little largest project. But we at the same time also see that we prefer to do projects which are 2-3 lakh square feet of carpet area, which can be a quick turn in and quick in and quick out. So these are our preferences.
Okay. So, Nitin, the repatriation from international projects, both UK and Bahrain. So, if you can give some status on that.
Great. So in this current financial year, UK repatriation already started, and that is something going on. And as we see moving forward, our guidance was for the Bahrain project about 2.5 years, and we have execution of that particular project going on in full swing. So our inventory entitlement there should give us a good cash flow exit, and we should have the repatriation as well coming from the Bahrain as we move on to the next financial year onwards.
Sure. Sir, any update on Pune project assets?
Well, Pune, we are still not, we're still finalizing and closing things over there. We will announce once things are, almost ready there.
Sure. So lastly, on the macro front, I wanted to ask, what is that, are you seeing any change in the mindset of Indian customer or, which will keep this real estate cycle going up for Indian real estate, sir?
So our take is, we are significantly seeing a great jump coming in for the demand for homes and real estate, particularly in India post-COVID, because people have taken real estate as an asset class of investment very, very seriously, and one of their prime investment factor. That is what we've observed. Secondly, overall the Indian economy is looking very promising, and with the kind of measures the government is taking towards the growth of the India as a country, I think majority of the investments of this growth from the public at large would be invested in real estate as one of their important investment asset class. So overall, I personally see real estate being in a good growth trajectory over the next few years. And definitely in that, developers who have been part of this business over many years and done good deliveries definitely stand an edge towards as compared to others. So we are seeing a promising uprise in the coming few years.
Okay. If I have further questions, I'll join the queue.
Thank you.
Thank you. We have our next question from the line of Avinash Gupta, an individual investor. Please go ahead.
Hello.
Yeah.
Yeah. Congratulations on good numbers. धवल भाई, मैं बस एक चीज कंफर्म करना चाहता हूँ, जो हम लोग पाइपलाइन दिखा रहे हैं अराउंड 3,000 crore worth of launches in next year, right? What is the confidence level on that? Because it's a substantial jump from last year. Last year, I guess we were around 1,200 crore.
So well, all these projects what we have announced, हम लोग ने जो भी announce किए हैं, firstly those projects have been signed. Those projects have been been in our books. Either there has been a agreement which is registered, or DA which is MOUs being done, or land where some JDAs have also been registered. So most of these properties what you see in the list have already been in our acquisition today. Number one. Number two, most of these projects planning have also been almost finalized, and they are under different stages of approval. So we are very confident about launching all these projects which we have announced in this coming financial year.
Great. Because to be honest, then I guess we are looking at the all-time high in the stock price as well.
Well, I hope so.
Thanks a lot.
Thank you.
Thank you. Participants who wish to ask a question may please press star and 1 on their phone now. As there are no further questions, I now hand the conference over to Mr. Nitin for closing comments. Over to you, sir.
Thank you everybody for taking out time and participating in this earnings call, Q3 FY24. I look forward to further interactions with anybody who has further, requirement of any information or update about the company. I'm happy to address that as well with my colleague Sonia. Till then, I wish everybody a very happy time. Stay safe. Everybody take care of yourself. Thank you.
Thank you, sir.
Bye-bye.
On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.